Is the Fed situation and the US data driving your thinking right now, or do you think what's happening in China more impactful on your analysis?
It's more on the Fed and the US, given that if you look at the last 18 months, really it's these big macro factors in terms of the growth inflation mix that really has been driven asset classes around the world. And we think we still have some ways to go in terms of that macro influence waning, and then the focus shift more towards sort of more regional, local, or credit factors, looking at the Asia credit markets. And part of this is because we expect the Fed to hike to between 5 to 5.25% early next year, and we do not expect the Fed to start cutting rates. And so we think that the rates influence will still continue for a little while. Furthermore, there's still a risk of a US recession, which our US team put at 35% for 2023. So we think those factors will continue the biggest factors, certainly in the coming months.
Well, over the course of 2022 as a whole, the macro factors have been pretty negative for the credit markets, right? But the past couple of weeks have been slightly different. I mean, do you think we have seen a cyclical shift? Is there reason for ongoing optimism? How do you read it from here?
So our preference is not to take a two-directional view from here. Partly is because the macro concerns that we talked about. Also because, as you mentioned, we've had a pretty large rally in the last couple of months. And for us, looking at valuation in terms of credit spreads, we're roughly around median level from the post-global financial crisis period to now. So valuation is neither particularly cheap or expensive. But then on the other hand, we also think that the technical picture is quite supportive. With interest rate volatilities dropping, we do see some cash flow coming into the market. Also, the new issuance picture is also relatively subdued. So net-net, we think, don't take a strong directional view. But we do think that within different credit ratings, there's been quite large dispersion across all the way from AA down to single B credit. So our preference is don't be too directional, but there are opportunities playing this narrowing of dispersion within the credit ratings.
Are there potential macro black swans out there right now?
For sure. I mean, I think black swans are, by definition, things that we don't foresee. So it's difficult to say, what those are. But clearly, in terms of us looking at risk for next year, the growth inflation mix continues to be one. The US recession continues to be one. Obviously, we're looking at commodity prices as well, which our commodity teams is very, very bullish on. And then the path on China's reopening. Clearly, there's some uncertainties in terms of how that will play out. So I think those are issues that we're all focusing on. But for sure, there are other factors in terms of things that are unknown by the market right now.